Following a presentation at the Union League Club on federal tax and spending changes that Congress may consider, Senator Durbin took questions from members of the press. This runs about 7 minutes.
One other thing I wanted to ask you about was the Deficit Commission's proposal on raising the retirement age, because we do have so many older workers who are having a hard time finding new jobs, and at the same time we have a lot of people coming out of college who can't find jobs. So if the retirement age for Social Security is raised, is there the potential to exacerbate those problems?
Well, unless you have an expanding job base. If you have an expanding job base, then those people will be able to find some work. But when you have high unemployment as we do now, it is really a challenge. But I just think the notion of raising the retirement age from 67 to 68 over a 40-year period of time is a very reasonable approach, and waiting 25 years to raise it another year. And we also added in there a provision, as I mentioned, for those who are in manual labor and physically demanding jobs, that they would still be able to retire early. That was something that I asked to be included. So I think that's a better approach, an honest approach, and I hope that the economy improves for those older workers, because I think that's the only way to deal with it.
Senator, can I follow up on the Social Security? I thought it was a little low. Why not raise it to, say, 70 over 40 years? It's already 67. So just to raise it one, with the longevity of lifespan we've seen over the last number of years, why not go to 70 on the retirement age? And secondly, should we means test Social Security?
Well, it is means tested in that income earned above a certain amount while you're on Social Security is subject to taxation. And what we've done with the increase in the retirement age over 40 years to age 68 and another 25 years to age 69 buys the longevity that we wanted, 75 years of solvency for Social Security. You can go up to a higher level. I'm not saying that this is the end of the discussion, but I think those are two reasonable things that most people would accept.
Could you, I don't want to dominate here, but could you go over again just briefly the idea of the adjustments in the tax rates on individuals as a trade-off for the home mortgage?
Well, let's step back and state the obvious. 70% of people do not itemize on their tax returns. They file a basic standard form. So they don't take advantage of current deductions offered by the tax code, mortgage interest or anything like it. And so the 30% who do, what we're saying to them is step back, if you will, and join us in an exercise. If you lost some part of your interest deduction on your mortgage, but your income tax rate came down, would you be ahead or would you lose out? Do the calculation. And some people, I think, will find that they come out ahead in the process. Now, I think it's good for us to have a mortgage interest deduction as an incentive for home ownership. And so I'm not talking about eliminating it, but changing it, modifying it in some respects shouldn't be off the table. We've got to have this conversation.
Was there any discussion, if we did eliminate the home mortgage deduction, of grandfathering that out so that those who have already contracted and faced the financial stability of affording their home, that you're not going to change that?
There are a variety of ways of approaching it, but even for those who currently use the deduction, I've talked to some members of my staff and said, before you panic, sit down and do the calculation. If your income tax rate went down from 24% to 18%, and what is your savings for your income tax rate going down? And now what is your savings for the deduction of your mortgage interest? Do the calculation. I think some people will be pleasantly surprised that lowering their income tax rate is going to mean more savings and fewer taxes paid under that scenario. But at least let's be honest enough to engage in this discussion, put everything on the table and talk it through about what the priorities are. I guarantee you the tax code is loaded with breaks and tax earmarks, if you will, that really don't serve the national purpose the way we want them to.
A question about the Durbin Amendment. As far as the interchange fee, which is being paid per cost, under your plan, where will that fee now be paid from? It seems as if that's something simply going to be passed on to the consumer in the form of more banking fees.
Already is.
Right.
And we think it's too high. And I don't think you can justify it in terms of the actual cost. If I paid with a check on a checking account in a bank, the fee charged by the bank to clear that check has nothing to do with the face amount of the check. It turns out to be pennies on the transaction. If I pay by debit card, it's dramatically higher, even though the same process has taken place. So what we want to say is, all right, those who own the debit card company and the banks that issue them are entitled to a reasonable proportional fee for the services that they offer. Currently, they are imposing, without competition, this interchange fees on the retailers. And we're trying to find more balance here. There's a way through this. I mean, and I wish that the credit cards and banks would have been more forthcoming. But they just basically said, no, we are going to protect our duopoly here with Visa and MasterCharge and the major banks, and we're going to fight you on it.
So what way through it would you then say there is? How is to stop it? The banks, that is, sorry. How do you stop the banks from simply completely passing this fee on rather than either lowering it or...
Well, the amendment says the Federal Reserve will establish what is a reasonable and proportional fee.
And what is a reasonable?
Well, they've come up with an amount, 12 to 13 cents a transaction,
okay,
which is about half to a third of what's actually being charged today. And so they may come up with a way to adjust that. It remains to be seen. Fed is now inviting public comment, and believe me, they'll get quite a few. Okay?
Thanks.
All right. Thanks, everybody.
You're watching the Illinois Channel, an independent nonprofit corporation formed to provide gavel-to-gavel coverage of Illinois state government and other public affairs events taking place across Illinois.